All right, let's dive into an example now of the classified statement of financial position. So over here, we have assets. And as you can see, assets are broken down into current assets, long-term investments, property, plant, and equipment, goodwill. In this specific example, we have no intangible assets, but if we did, it'll go above goodwill. So we have three different columns now. Once again, subtotals. So we can say this as subtotal, subtotals, and totals. So current assets, we have cash, held for trading investments, accounts receivable, merchandise inventory, supplies, prepaid insurance. These are all within 1 year. Because if you think about this logically, merchandise inventory, we want to sell it within 1 year. Accounts receivable, we want to receive it within 1 year, etc., etc. So all of these added together is going to give us our total current assets of 22,100. So what I suggest is to kind of rewind, pause the video, get on a piece of paper, and as I explain it to you, write this down as you go so you can start grasping the actual knowledge, right? So the next category is long-term investments. So since we only have one long-term investment, there's no point of calculating any subtotal, so it's going to go directly into this column over here. Then we have property, plant, and equipment. So land is never depreciated, it goes into this column over here. However, now we're going to calculate the actual carrying amount of the building and the equipment. So the carrying amount, the formula is the cost minus the accumulated depreciation. So we're saying the building's cost is 75,000. However, the accumulated depreciation is 15,000. So 75,000 minus 15,000 gives us 60,000. Then we do the same thing for equipment. Equipment is 24,000, less accumulated depreciation is 5,000, gives us 19,000. And now we're going to add up the 40,000 plus the 60,000 plus the 19,000 to get the 119,000, which is total property, plant, and equipment. In this question, there's no intangible assets, so we leave that out altogether. But goodwill, we have goodwill balance, which is 3,100. Then to calculate total assets, we're going to add up the 22,100 plus the 7,200 plus the 119,000 plus the 3,100 to arrive at 151,400. Then we're going to shift our attention over to liabilities and shareholders' equity. Because remember, the balance sheet or the statement of financial position has the main accounting equation. Assets equals liabilities plus shareholders' equity. So liabilities, we have current liabilities, which is less than 1 year. Then we have non-current liabilities. So current liabilities, we have accounts payable, salaries payable, interest payable, unearned revenue. Then we have a bank loan payable that is due within 1 year. Then we have current portion of mortgage payable, which gives us total current liabilities of 17,050. Then we have non-current liabilities, which is a mortgage payable. So mortgage payable is the 10,300. That means total non-current liabilities is the 10,300 as well. Now we're done with our liabilities. So the 17,050 plus the 10,300 gives us total liabilities of 27,350. Now we're going to shift our attention over shareholders' equity. So the two main shareholders' equity accounts, we have our common shares, 74,000, and retained earnings, which is 50,050. That means our total shareholders' equity is going to be 124,050. And then our total liabilities, 27,350, plus the total shareholders' equity of 124,050 gives us total liabilities and shareholders' equity of 151,400. As you can see, our total assets of 151,400 equals our total liabilities and shareholders' equity of 151,400. And remember, the accounting equation must always remain in balance. Very important.